Hey everybody, hello, my name is Darison Chauskas and I'm the Chief Market Analyst here at Markets.com, and today is Tuesday the 3rd of June 2025 still. So yes, look, I wanted to quickly share with you a little piece here, a little technical piece on Ethereum. Look, I've done crypto updates before, so you can check out those, or you can find one in the description below. But look, I just wanted to pick up on Ethereum for now. It seems like this one is somehow the most attractive at this point. Not to mention fundamentally, but also technically. When other ones, yeah, Bitcoin is nice and popular and everything. However, in terms of setups, I think Ethereum looks a little bit more attractive. Yes. So look, after we had this nice pop here in the beginning of May, we traveled higher, and as you can see here, I don't have any lines yet, but I'll put those in a bit. But first, I'm going to focus on the EMAs because look, as you can see here, we're sitting above the 200-day EMA. We have tested it a few times, but we're struggling to drop below it. So in a way, it's a good indication, a positive indication. And this is a daily chart, by the way. Now, oh, excuse me. Now the thing is that also what I'm seeing here, so the 50-day EMA shown as the green line is trying to cross now the 100. So in a way, we could be having this nice cross, this positive cross here, or crossover of the EMAs. But again, it's a little bit too early to talk about that. So, in general, instead of like waiting for the cross to happen or anything like that, I would rather focus on some key resistance barriers instead. So, for example, right now, what I'm watching here is this high of the 13th of May, which is around 2,737 zone-ish, approximately around here. Now, of course, what we can do here is we can mark this highest point of May as well, near the 2,786. And what it gives us is that we're having a nice little area of resistance. So keep your eyes on it, because if we start testing it, then maybe we could see a breakout. And if we do see a breakout, then in a way everything is actually working out very nicely, in my opinion, because then we have ourselves a nice higher high, and potentially could attract more buyers into the game. Now, the only thing is that I wouldn't rush into things yet. I do understand that this is becoming quite an attractive area for everybody, but I wouldn't rush yet, because look, on the other hand, I have this little short-term upside line which I want to draw right here. And that tells me that maybe, just maybe, we're not really ready yet to go for that high. Maybe we could see some more sideways action and wait for like a catalyst of some sort to drive this one higher. So that's what I'm saying. That's why, for me, although I love it, I love the idea to the upside on this one, at the moment I'm just trying to be a little bit more careful, because in a way this could actually quickly backfire, because don't forget that you're not the only one who's seeing this, and everybody's seeing this. So again, sometimes the market does that when we could see a drift lower, we could test maybe this area somewhere, maybe we could test this, actually we could test this little hurdle here, the low of the 18th of May near the 2,326-27 zone, and at the same time we could test the EMAs here, the 100 and the 50. And if this provides good support, then we could rebound and push back up. So we've seen scenarios like this happen before. But again, for that, I would say just keep your eyes on the 200-day EMA right here. If we do drop below it, then, like I said, I'll consider the next possible area of support around here. Certainly, like I said, the priority is to keep an eye on this area, on that 2,736-86 zone-ish. And then, yeah, we could go from there. Certainly, there are a bunch of areas that you can target. Of course, initially, we'll be targeting that psychological 3,000 zone. But maybe slightly higher levels could be a little bit better here. We could maybe aim. Okay, we'll aim first for this 3,030 zone, or in general the 3,000 zone. But then, yeah, maybe, like I said, some of those other targets could be nice here as well. But look, also what you can do is you can apply the Fibonacci extension from the short-term perspective. You can draw from this low that we saw, the lowest point of May, to the high of the 13th of May, and then to the low of the 18th of May. And what we'll get ourselves here is that the 50% here on the Fibonacci extension is around the 2,819 zone. Then we're getting that 3,000, near that 3,000 zone, near the 61.8. And if we're lucky, then we can aim for that 78.60, which is around the 3,100. And I think, you know what, I'm going to draw my arrow up until here. I think that's quite a logical area to go for. But first, of course, the psychological 3,000 zone would be the next step for me. But again, for that, I need to see that clearance. Until I see that clearance, it could still drift lower. So just, ladies and gentlemen, don't try to get caught out in this. And if you are, for example, right now in a trade and you're waiting maybe for this one to to pop because you maybe saw this already as well and you entered way too early, I would say, if you can afford yourself, to wait up until this upside line somewhere, then okay. But if you cannot afford, then unfortunately, it's better to close, better to come out, and then wait for a better entry. So, ladies and gentlemen, again, I'm not saying that I'm buying this one here. No, but this just looks a little bit more bullish than bearish, which clearly is based, like I said, based on the just simple technical analysis. However, I have to say that until the breakout happens, it could still go either way, and it could actually go against you. It could go, so just be careful, be cautious, do your homework, and everything will be fine. I'll see you later. Bye-bye.